So I went to work in New York right after 9/11, and Goldman had built what many were somewhat derisively referring to the NASDAQ 5000 building across the water in Jersey City. It was J. Aaron. And there was a growing belief that all of Lower Manhattan, Goldman was going to move across the river, which tacked on another 20 to 30 minutes to commutes from Connecticut, which was untenable.
Plus, it was Jersey. I mean, no self-respecting banker could say they office in Jersey.
The spin on that was unbelievable.
I remember that building.
I will tell you guys, when the Connecticut people show up in Nantucket, everything changes, because Nantucket moves from being we're all just trying to survive and enjoy a life we can't afford to we're all here to serve the people from Connecticut, because they'll just ask them. They'll tell you how important they are. Hey, welcome to BDE.
Yeehaw.
I'm Kirk Coburn. I am joined by Mark Meyer and Chuck Yates, who is absent his private jet, looking to get it back with one more sale of Collide AI. Welcome, gentlemen.
I believe we tripled our ARR at Collide this week. So knock on wood, we sold some software.
Dude, that is congratulations.
Congratulations.
Well, let's just go there for a second. What was the argument that sold the deal?
That's a good thing. Kind of the thing that the market is starting to realize is Copilot, ChatGPT, what I'll call more kind of horizontal infrastructure type AI, just can't get the granularity necessary to do the job in a deep, complicated vertical like energy. And you need all the things we do at Collide to kind of get that last mile done. And that last mile is really tough. So I think people are starting to realize that.
That's retail AI to me.
What do you mean by that, Mark?
Well, you got professional grade, which is inherently vertical and deep, and then you have something that can literally look at every piece of information that's ever been put on the internet.
No doubt. I love the idea of calling it retail AI, but I built a CRM for fractional executives. That's awesome, by the way. Not because I built it, but it actually works. And I did use AI to help me, but I have a coding background. And one of the things you realize is that AI, its memory is not great. The storage you need requirements are huge. So it goes off script a lot. So you still need one throat to choke. You need experts in the room. AI can be very helpful at finding information, but especially in energy, you need something that can go deep. But you still need experts in the room. Now, Collide has Todd Bush. So, I mean.
Yeah, exactly.
Y'all are good. Y'all are good now.
Y'all are going to love this. So I'm actually going to record a podcast this afternoon with Canisius Rosario, our chief technology officer. And we got him out of Upside Marketing, which is the multi-billion-dollar software company out of Austin. You know, when you pull up to the gas station, it goes, "Hey, Kirk, your favorite coffee's on sale inside." That's Upside Marketing. And anyway, so he's pure software dude and not an energy guy. The third day he was at Collide, we go out and see this big oil and gas company. And we started telling Canisius about how this industry just runs off of maps. And that when he builds mapping for Collide, he's actually going to have to put the maps upside down for the geologists, because they always stand at the top of the table and look at an upside down map when they present. And anyway, Canisius believed me, and about 48 hours later, I hear Canisius and Colin talking, and Colin's like, "Chuck, cut it out."
Fantastic. I've got another private jet story but we need to get into like why people listen. They probably listen more for the private jet stories than they do for the news. And oh, by the way, we do have data that just broke. This is huge. You know the number one reason people tune in to our show?
No. Why? What is the one reason why people
Mark
tune in?
Meyer's IEA reports.
Just shoot me now. Just take me now.
The show has officially been canceled.
You said it, Kirk. I didn't. I'm not going to even utter the acronym today.
I break out in convulsions. All right. Speaking of geologists, and a very fine geologist that is Tom Jordan, CEO of Coterra, who I met probably 30 years ago back when he worked for Key Production and Mick Morelli. And Monty Robertson. And anyway,
And how'd you treat him back then, Chuck?
Oh, I was a young investment banker, dude. I was vendor city. Right. I was.
Did you have a vest?
Yeah. Well, I don't know if vests had hit yet, but I was definitely finance, bro. So, Mark, what'd those guys do?
Well, one of the, widely anticipated and long anticipated deals got announced, and that was the all-stock merger of Devon and Coterra, $58 billion combined value, really long on, described in the headline as, or at least the deck and the conference call, as a transformative merger. But it seems like the way I look at it, it was mostly universally positive across the analyst community, reiteration of buys, et cetera. But from a strategic asset standpoint, I believe this is really primarily about bulking up, extending Devon's position in the Delaware. I found it interesting that there wasn't a whole lot of feature of the Marcellus assets that Coterra brings, which they, of course, acquired in the Cabot transaction that has been, I guess, subject to mixed reviews since that time. If you remember, it's been a few weeks ago, but Kimmeridge had announced a campaign on Coterra, not the least of which was getting Scott Sheffield to agree to be on their slate of nominees for the board. And so you've got $1 billion in projected synergies run rate in 2027, a third of which is going to come out of quote unquote corporate redundancies. And I think one of the more impactful messages here is that the company will be headquartered in Houston. And that, I think, implies all kinds of anxiety, et cetera, for Oklahoma City, although they did say that the company will retain a strong presence in Oklahoma City. I don't know if it's a Devon Tower worth of presence, but that was kind of the chatter around the deal.
Well, you don't think there can be $1 billion of reductions with a full Devon Tower in Oklahoma City, but
you know what redundancies mean? Redundancies equals AI, which in other words means we're firing a bunch of people. I mean, unfortunately, right?
As we know from a lot of our contacts, and at least the way I assess it among the E&Ps, I think Devon is pretty out front on its adoption and development of digital capability. And so technology was a big part of this, but we've attached the investor deck here from the transaction conference call, and you just look at the overlap and alignment map from an asset perspective, and it makes a lot of sense in the Delaware. We did have the words world-class pop up several times. I think one was ascribing that moniker to the Eagleford, but really this is about, bulking up and scaling up in the Delaware, in my mind, with, capitalizing on G&A reductions and capital efficiencies and cost of capital.
one thing I'll make about the deal is another kind of kudos to Ben Dell at Cambridge, because I forget how long ago it was, but post COVID, but 4 years ago, Ben Dell started talking about, hey, you need to merge with no premium, just stock for stock. Let's do it. Let's get these deals done. Let's not hold up the deals looking for a 10 or 15% premium when at the end of the day that gets wiped out when the stocks normalize anyway. And so it looked like they followed that model.
Yeah, I think Devon trades at like a 4.3 consensus EBITDA multiple. The sector has had a strong run here in the last several days, couple of weeks. A lot of that, has the good old days geopolitical premium around Iran returned. But yeah, I think what Kimmeridge did with Oventive, same type of catalyst for Coterra. Post-merger, expected to close sometime in the second quarter. Clay Gaspar will be the CEO of the combined company, and Tom will take on the role of non-executive chairman. So I believe he gets a change of control out of this.
I think everyone wants Tom's job, even though you're not in power, because you get paid a fat salary to do nothing. He has no power, but good for him.
Well, supposedly deals fell apart over the last 5 years, particularly in the oil service world, because the CEOs were fighting on who got to leave. It wasn't who was going to be in control. It's like, no, I get to go. You got to run this. Nah, we're not doing it then. So,
this is a Delaware Basin deal with some side dishes. Marcellus, that's the garnish nobody ordered. And capital is going to flow to where returns are fattest, which is Delaware. It'll be interesting to see sort of in a combined entity, which will take a lot of time because that basically grants them a year to make excuses of what they're not going to do, because it's hard. It's really hard putting two big organizations together. But I would love for them to throw Marcellus to guys like the three of us. I'd love to take Marcellus off their hands.
We would screw that up so quick.
Oh, for sure.
God, yeah. Hey, did you send out the royalty checks? Damn it. Who was going to do that?
For sure, 100%.
We could have Dad Toby watching over our shoulder, making sure we don't screw up too badly.
No, even he couldn't bail us out, the incompetence level. I've got a cool little story about this. The Devon entree into the Delaware came via their WPX acquisition. WPX got their Delaware position from Panther, which was a company I backed back in the day, Barry Mullinex and Roy Grossman. And we sold it to WPX for just under $1 billion. Great transaction. We did really well on it. And Rick Moncrief was the CEO of WPX. And Barry Mullinex is a dear friend, but he's a piece of work. And so we were trying to think of what can we do for a closing gift for Barry. So we actually hired a crop duster and printed up a long banner that said, "Congratulations, Panther, on your sale to WPX." And we flew it over Tulsa for 8 hours. And I actually had to call Rick Moncrief and apologize. I'm like, hey, Rick, I know this is really obnoxious, but you like Barry as much as I do. And he's appreciating this. So that plane just flew around for 8 hours, and it made the Tulsa World Tribune or whatever their paper is. Big picture of that on the front page.
I'm sure Rick took it well.
Oh, yeah, Rick laughed.
Now that I live in South Oklahoma, I just wanted to look at it. And what's interesting is Oklahoma is like the AAA farm team for Houston Energy. Halliburton left Duncan for Dallas in 1961. Then Houston in 2003. Conoco left Bartlesville for Houston in 2002. Kara McGee in 2006. Chesapeake expand, quietly growing their Houston footprint. So what is it about these Oklahoma oil and gas boys and gals that are really good at building energy companies. I mean, it's perfect for Houston. They just look in Oklahoma. That's where you buy.
We're just taking back the formerly departed Ocean Energy, Santa Fe Snyder, Mitchell Energy, all of which were headquartered in Houston. So,
well, and the other thing we always, anytime the energy business is in a ditch, people always go, "Oh, is Houston suffering?" And actually, what happens in that scenario is you close your New Orleans office, you fire half the people, but you bring half of them over to Houston. You get rid of Shreveport, you get rid of Lafayette, you get rid of Oklahoma City, Tulsa, Denver, Casper, Wyoming. Pick all those cities and you consolidate back into Houston. And I do think there's exponential growth in Houston for corporate headquarters because you want to be at your kids' baseball game and sit next to the head of land for another company, and that uniquely happens in Houston, Texas.
Yeah, you got more choice of FBOs in Houston.
Fortunately or unfortunately, we had a daughter that was a cheerleader, so we went to the Friday Night Lights football games at insert local in the middle of Houston private school. And the deal attorneys in oil and gas that run that sideline as if they are the head football coach was insane. It made me sort of like, I don't want to be here because this is ridiculous. But of course, if I was a deal attorney, I'd be doing the same thing. So yeah, it's good for Houston. And I agree, except there's some good golf in Oklahoma, by the way. Tulsa, amazing. And guys that are good golfers that I talk to, it's like 2 stoplights to get to the golf course. Houston is another story.
All right. I actually hate to do this because I like both companies and people at both companies, but this is kind of pretty funny. I went on Grok and said, give me a hot take, nimble fatty style on this merger, and it says it's the corporate equivalent of two dudes at a bar realizing they're both sixes, both losing their hair at the same rate, both driving 2018 F-150s and going, want to just merge households so we can stop paying 2 streaming subscriptions? Ouch.
That far trumps the best one that I picked up yesterday.
Well, at least Wall Street yawned at the merger, which means they basically gave it a blessing. So
yeah, no, and there's more to come. This isn't going to be the last one of these because there is a lot to be said for scale. There is a lot to be said for automation and what it's going to do in the workforce. So it's coming.
Chuck, does this dislodge any more private acquisitions by the public strategics?
I mean, I think at the end of the day, you wind up, if you're willing to take stock as the private equity person, everything's for sale. The question is, do you want 4.3 times EBITDA for it? So.
Well, I would say that the news is the message to every mid-cap E&P CEO is clear. You're either at the table or you're on the menu. But here's the thing, Chuck, you've been in this business. Oh, Mark, you too, for 100 years now. So, I mean, both of you guys were born in 18, whatever. What? Wow, that's a long time to be alive, guys.
That's a hell of a way to talk to your prospective clients.
Hey, dude, I'm with you, man. I was born in, dang, I hate that. Everything hurts. Chuck, I grew up around this business, hearing about it. I just said something that now I'm thinking back, like that sounds stupid. Like we're always in this cycle of, we're buying, being bought, or no one's buying anything. Why is now the time to buy? Tell us. Just level set us.
I mean, at the end of the day, you can make a true case here for the commodity super cycle to hit, and you ought to be accumulating as much in the way of assets as you should. We're bouncing around at $60 oil. Natural gas has had a little bit better run here recently, but you can make a case that the underinvestment that it feels like we talk about weekly on this show, in 2 and 3 years, the roosters are going to come home to roost, and that would be the reason to buy. I think the other case you're going to make is bigger, better scale is going to happen. And then when you have bigger, better scale and it doesn't materialize in better returns, that's when you get startups popping up. So that's kind of the cycle.
Yeah, one interesting graph in the investor deck is showing positioning of the peer group relative to their scale of lower 48 production. And post-merger, Devon moves into second place behind ConocoPhillips, albeit significantly gassier. I think 1.6 million barrels equivalent per day. So good point on the scale up.
All comes down to cost of capital. I'm convinced of it. It's all about, if you're a mid-cap E&P CEO, it's how much is my cost of capital and what am I telling investors, because it costs me more money and my returns are going to be less because these big gobble up goobly doos. Let me set up the next conversation, because 2 summers ago, it might have been 3, I was on the beach with a executive VP of one of the largest owners and operators of data centers in the world. And he told me data centers is everything, man. And what I knew from energy is that we don't have enough energy. And it's not just energy. We can produce a lot of energy, but producing a lot of energy in the right locations, because energy, generating electricity is a local thing. We don't have enough electricity in the key areas around the world to generate enough to power these data centers that we're going to need because of AI coming, and et cetera, et cetera. So, Mark, set us up. What is happening with data centers?
Yeah, I came across this last night on LinkedIn, someone who tracks the data center market in the US. And I guess I was a little not surprised totally, just because the dynamics are moving in this direction. And we see it in every major wave of infrastructure, a big part of it's NIMBY. But we're seeing an acceleration of data center cancellations. We had 25 last year. That was up from 6 in 24 and only 2 in 2023. Now there's been a wave of announcements over, interspersed in that time frame. And in 40% of the cancellations, water and related greater public issues related to water were the primary driver of those cancellations, at least cited by this market observer. And we'll attach the full LinkedIn post here, Jacob.
And what do you mean by water, Mark? Literally, I don't have enough water to flush the toilet? Or
well, in evaporative cooling, which is in a lot of cases migrating probably more in the middle market, the multi-hundred megawatt size to liquid cooled. But you still have a kind of a battleground over water, because if you're doing evaporative cooling, you have to have almost distilled water type of purity. And so you start with fresh water. It's not, treating produced water in the Delaware Basin from a cost and viability standpoint. You are competing, at least the perception is, you're competing for significant volumes of water. I think looking at, I want to say 50 megawatts and strictly, it depends on your heat rates and all the different calculations you have to make. You're talking about something on the order of 80,000 barrels a day times a bunch of data centers. And whoever knows specifically more about that, which I'm not claiming to know, can check that. Not even back of the envelope arithmetic. That's more anecdotal. And so water's clearly certainly not as high profile when we think about all the more less easy to, I guess, see, which is, emissions has been the big driver. You see a lot of these data centers wanting to be net zero, whether that's CCS combined with the power in the data center construction. But
let me ask you a question, Mark. Who cares? Why should we care about this story? Why is it important to us?
Here's why. So if we're looking,
I totally was knew Chuck was going to jump in.
If you're looking for the canary in the coal mine, data center reductions, you look at Microsoft recently reported earnings and stock fell 11-12%, I think down 10%
because of the founders'
the
viruses, or what are we talking about?
No,
CapEx.
because no, it was even more specifically that Azure, their cloud compute revenues only grew 39% year to year, and a lot of Wall Street expected north of 40% growth on that. Microsoft's take was, hey, we were using a lot of our compute power internally on OpenAI. Instead of selling to our clients, we could have had more revenue there. And it was sort of a double whammy. Well, you didn't get the more revenue. And oh, by the way, why does OpenAI take all these resources, to Mark's point on CapEx? And so is this the canary in the coal mine, that maybe AI is not all it's cracked up to be, all its data center? I'm here to tell you this is a blip. I mean, AI is going to be a runaway train. It is going to be the transformational technology, more so than the shale revolution and the internet put together. We're going to throw so much money off this, and there are going to be blips all along the way and setbacks, et cetera, but the transformation is going to be huge. So I'm like, to your point, why is this a story? It's interesting, but we're going to look back and say it's a nothing burger.
Well, here's my question. Collide's going to have to raise some more money at some point. So as an investor, here's my question to you, Chuck, as an owner. Okay, I want an answer. Where are you getting all your cloud compute for your AI engine? And you better have a better answer than just Amazon. Because if you keep saying Amazon, Oracle, Google, God forbid, that's not an acceptable answer now that everyone's looking inside of all of those big providers saying, what are they doing? So what is your answer when people are like, how are you going to have enough compute power? What is the compute cost? Because your revenue model needs to take into consideration that these costs are most likely going up. What say you, Chuck?
So nobody's talking about it right now, but in a future world,
no savvy investors talking about this.
Well, general
I'm sorry, I'm savvy.
There you go, savvy. You're also, I believe you rejected the offer to invest in Collide, but that's another story. That was funny. You can laugh.
Yeah, I'm laughing about how my credit card keeps getting declined because I need to pay my bills. Like, I have other issues to worry about.
Fair enough. No, but clients aren't thinking about this right now, but tokens and running these searches, you got to think the price of that is going up in the future. So we're actually spending a lot of R&D dollars earlier in terms of building our RAG software. We actually, and Jacob needs to put up a picture, we've got Spindletop. We've got a $25,000, I think we've got 4 GPUs in it, machine that we're running stuff on today to help minimize that cloud and compute cost. And it is, I don't want to scare people, but I do want people to think we're cool. It wouldn't surprise me if in a year we're walking in, giving you a Collide system saying, by the way, here's your computer. What closet do you want it in? Because at the end of the day, I think, we're talking about that last mile, and to fix that last mile in terms of precision, You got to condition data. You got to chunk embed, slap metadata on it. You got to have RAG software to sit there and retrieve the appropriate stuff. You also, we're fine tuning our own language model that there's a big press release coming in the future that I can't talk about, but it's pretty freaking cool. And then the last thing is you're actually going to have to fine tune hardware for costs as well as precision. I mean, you run the same query on ChatGPT 10 times and you get a different answer once or twice. A lot of the time, that's a hardware issue, just given the way they bundle the information in the kernels to process it. It's not a software problem. So we're attacking it on all that fronts. But you're right. In the future, I mean, I think the cloud has disappointed in terms of being cost effective, because everybody that went from having stuff on-prem to cloud has cringed at the costs they've paid.
And those big on-prem cloud-centric data centers are inherently grid connected and close to industrial and metropolitan centers. I think, to answer your question, Kirk, I think NIMBY is ultimately forcing a pivot here, whether it's water, whether it's emissions, whether it's noise, et cetera. It is forcing a pivot that we're going to see more of, particularly on the inference side. We're going to see data centers that are, much faster cycle time, and they're going to where the energy, namely natural gas, and the power is to less populated areas where you run into these, public interest issues, which water clearly is, emissions is, particularly for an EPA non-attainment zone. We've seen that. And so I do agree that, what Chuck described is really a distributed model of compute on-prem. I've had these same conversations with Colin talking about Spindletop. And so, I think we're going to see maybe a diffusion depending on, what the function is. But
I had the same conversation with my father, who started coding on mainframes. And so when the cloud was hitting, he's like, we're going back to the way compute used to be done. And it's going to keep, this is this vicious cycle. What's interesting, and this is a prophecy, which means this is prophetic, boys. But the heaviest cancellation rates for data centers is in PJM, which is the Northern Virginia corridor, which has been really the ground zero for data center development, because that's where AOL came out of, and the U.S. government.
All the telecom connected to the government. Yeah.
Yeah. I mean, it's people just grifting off of the big teat. But PJM keeps failing its reliability target. And so they're canceling a bunch of data center orders because of grid reliability. But here's what's interesting is PJM's the poster child for what happens when you try to bolt on, you have 21st century demand with a 20th century grid with a 19th century permitting process. So
that's good.
Write that down. And ERCOT's open for business, no cancellations, because they say bring your own power. So that's, Texas, we've been beating up on ERCOT. But here's the prophecy. If we don't figure this shit out, China will. And at one point, and the Saudis, because they have a lot of money, at one point, you're going to start seeing regulations change where data security, people are willing to move their data offshore because we just can't get it done. Right now, it's not happening because of all the laws, but let's follow this for the next 10 years. I bet there's going to be a lot of push to start moving and securing your data anywhere that has cheap data center capacity. That's what, and I know on-prem is one route, but that's really expensive, I think. But we should do the math. We'll have some finance pros invest. Tell us.
Devon branded hyperscalers in the Marcellus.
There we go. Monahan. If I'm the mayor of Monahan's, Texas, man, I am rolling out the red carpet. We can put it anywhere you want. The one funny story about us and Spindletop, Colin ordered all this stuff from Micro Center, and when he showed up there, they were like, hell, we didn't even know this was real. We were wondering if you were going to show up. So he got all the stuff. It was total Geeksville over here at Collide because all the components were out and they were putting it together, and late night pizza was ordered and all this. And we're going to plug this bad boy in. And Jimmy was great. Jimmy was like, hey, shouldn't we get a surge protector before we plug this thing in? It's like, yes, we should.
I just want to know what Micro Center thought when a thug rolled up in his big ass truck, or is he driving an electric car? But when he got out and he looked all, UFC.
Yeah.
Not some big fat guy that eats pizzas that
you don't
codes
look like
all
a
day.
gamer.
Yeah, exactly. Exactly. God knows what they thought. But anyway, hey, let's do this. Can we do just 5 minutes on trade policy?
Sure.
And I'll let you fire away at that because I think more than 5 minutes would put us all to sleep and lose half our audience.
Not as much as the IEA, but
just throw IEA
there, I
in.
said it.
Yeah, exactly. Say it.
In a nutshell, over the past week
Listeners,
or so,
tune out for the next 5 minutes.
there's been a flurry of trade-related, I think, security moves by the administration, not the least of which was Rubio a couple of days ago hosting a critical minerals summit at the State Department. And there were dozens of our allies there, both EU, Japan, some of the African countries where minerals are ubiquitous. And so, this is, and in one case, the threat of tariffs, because some of these countries like Canada, and there's fairly high profile resurgence of friction between Carney and Trump. We're gonna slap a 50% tariff on Canadian planes if you guys move toward your embrace of China for different things that are subject to tariff from the U.S. So, there's that. There was a higher profile trade deal announced with India with Prime Minister Modi. The crux of the demands from our side, lowering our reciprocal tariff from 25% to 18%. Of course, we got zero. Looks like a win. But, the overarching thing was allegedly an agreement for India to quit purchasing Russian oil. And a $500 billion investment or trade commitment from India involving things like energy, technology, and agriculture. On all these things, the devil's in the details, and we are, one other, this is not related to the summit, but Alaska Senator Sullivan is raising alarm about the spike in Arctic activity, military activity by the maneuvers by the Chinese and the Russians. And I thought it interesting that, talking about icebreakers as being one of the things that we want to have more capability and capacity in, Russia has 54 nuclear-powered icebreakers, or as he called them, they're nuclear-powered and weaponized. You know how many we have?
0?
2.
2.
And one is in dry dock. So apparently there was a $25 billion Coast Guard provision in the One Big Beautiful Bill. There was, I think, a deal struck with a shipbuilder in Finland for 3. I don't know where that stands in terms of final agreement, but the gap between 2 and 54 doesn't sound like can be closed between now and certainly the end of the president's term.
2 quick things on this. I think it's important. We had all this trade flurry stuff, and the market is getting to the point it's just ignoring. So if Trump goes on a future rant or something, we won't see the stock market collapse. Conversely, good deals, we're not seeing a huge bump. That I think is a good thing, just given how Trump operates. The second thing I will say is I am seriously concerned from a strategic point of view that we just cannot ramp up our shipbuilding strong enough to compete in this world. And so we need to be thinking through things of, can we buy from allies? Can we get rid of the Jones Act and maybe use allies' ships but tariff them or something? Because at the end of the day, I mean, 2 to 54 sucks.
And remember, China's shipbuilding capacity today is 300x the U.S.
Oh, yes, yes.
And they build on the commercial side. They build those with tight alignment with the Chinese military. So those ships can be put into military service quickly.
Yeah.
So it was just a spike in, as this Greenland fracas pops up, they've noticed a pretty significant increase in, this is not Greenpeace out there, doing whale surveys. This is, these are Chinese and Russian assets that have really increased their presence, encroaching on Alaska, which, as Sarah Palin once said, I can see Russia from here.
Man, I mean, there's some famous political quotes. That's one of them. I don't know, of course, the news, but the Critical Minerals Summit, Rubio, I think this is really interesting. Rubio basically told 55 countries that China has us by the periodic table and we need to fix that together. So the IEA, by the way, comparison isn't subtle. They're basically trying to build OPEC for minerals, except we're the cartel. So I think that's super interesting. Now, whether they'll pull it off or not, but that to me is the news that I took away as, wow, that's pretty interesting. Don't know.
And one of the things I think Chris Wright said in the midst of this summit was, we really got to focus on processing, where, China's an 80 to 90% monopolist in terms of processing critical minerals.
No, and I would say to the environmentalist, if you want all your electric cars, etc., we have to do that, and we have to do that here. And if we're speaking Russian or Chinese in 30 years, that's on you, not on me. So, boys,
right.
This was fun. As always, it was very fun.
Was that your subtle, we're done? We have no more things to talk about?
No, it was a very overt, I must pee. That's
what I thought.
I've been at this for an hour and I drank the whole thing.
Well, that's what that cup is for, is to fill it up.
Last time he ejected because he had to go sell software, which has kind of been the...
I do have a 10:30 somebody coming in.
Awesome.
So, yes.
Go sell some more.
Yeehaw, guys. Good to see you, boys.